Hello there, welcome to Bizworld. The government is looking into all projects given to China by the previous Barisan Nasional BN administration in return for China's offers to bail out the troubled sovereign wealth fund 1MDB. Finance Minister Lim Guan Eng said he was unaware of the allegations by the Wall Street Journal, WSJ, that senior Chinese leaders offered to help bail out the troubled state fund in 2016, but he only knew the cost of the project was raised.
I have to go and check with the records, but I'll be interested to have a copy of those minutes by Asian Wall Street. But definitely the price of these projects is inflated. I have to refer back whether there are any details that are explicitly said. Of course, if this is explicitly said in black and white, then this is something that we would pursue.
Malaysia's current government has halted billion-dollar projects backed by China. That includes the Sabah gas pipeline project awarded to China Petroleum Pipeline Bureau and overseen by Surya Strategy Energy and Resources, and the 81 billion ringgit East Coast Rail Link, which remains in limbo after previously being halted and then cancelled. China Communications Construction Co. was picked as the main contractor for the railway aimed to connect the eastern part of Peninsular Malaysia. Maybank Investment Bank Research, Maybank IB, has maintained its positive call on the property sector, although nothing that recovery could still be slow given that huge amounts of unsold stocks. In a research note today, Maybank IB said home sales have probably hit bottom and should improve this year, boosted by the soon-to-be-launched Home Ownership Campaign, HOC. It said the concerns on record-high unsold stocks in the country and slower gross domestic product growth should have been largely priced in with the sector's rock-bottom valuations. Maybank IB added that the upcoming official launch of the third HOC in March should help boost property sales for the year. The HOC, which was first introduced in 1998, is a joint effort between the government and private developers to reduce the record-high unsold stocks. Meanwhile, property advisor Knight Frank Malaysia also expects the local property market to improve in 2019, especially the residential property market. In a statement, Knight Frank Malaysia said policies announced under the budget 2019 are expected to strengthen demand, particularly among first-time house buyers. It said the property market in Malaysia experienced a pickup in activities during the second half of 2018, as pockets of opportunities can be discovered in different areas across the region, barring any external shocks, such as a global economic slowdown. The views are in conjunction with Knight Frank Malaysia's latest research report, Real Estate Highlights Second Half of 2018, launched today. Meanwhile, the industrial sector will continue its resilience due to a favourable growth trajectory in key manufacturing industries. However, the office and retail markets are set to remain challenging due to elevated supply levels. Knight Frank Malaysia said this year is anticipated to see a higher level of land banking activities among industrial property developers. Malaysia's real gross domestic product GDP growth is expected to slow to 4.7% this year and 4.5% in 2020, after averaging around 5% from 2015 to 2018. According to Moody's Investor Services, external headwinds from trade protectionism would weigh on trade activity, while a review of infrastructure projects and slowing public spending would prove a further drag on growth. In its recently released credit analysis titled Government of Malaysia A3 Stable Annual Credit Analysis, it stated that the country's economic expansion will stay stronger than the median average for A-rated sovereigns, even taking moderating growth into account. Malaysia's A3 stable credit profile reflects the country's large and diversified economy with healthy medium-term growth prospects, while the relatively high government debt is partly offset by a favourable debt structure and large domestic savings. It added Malaysia's fiscal policy choices, in particular, abolishing the goods and services tax will narrow its revenue base and reduce fiscal flexibility. However, deep domestic capital markets and high savings provide a strong funding pool for government's debt and partly offset these fiscal weaknesses. Prime Minister Tun Dr. Mahathir Mohamad will be writing letters to French President and the Norwegian Prime Minister to protest the European Union EU Parliament's decision to ban palm oil. According to Primary Industries Minister Teresa Koksu-Sim, once the letters are completed, the ministry would send a copy to the Malaysian media.
In the Cabinet, we have discussed this issue because we see that it's going to be a trend where one after another, countries in Europe, they are going to pass this kind of rules or resolutions in their parliament. This is going to affect the bilateral relations between Malaysia and all these EU countries.
In an additional measure to combat this issue, the minister said her ministry would chair a palm oil war zone meeting involving the International Trade and Industry Ministry, the Foreign Ministry, and the Energy, Science, Technology, Environment and Climate Change Ministry to discuss how the government would deal with the ban. She added that the price of crude palm oil is slowly picking up from 1,700 ringgit per tonne in the last 3 months to slightly above 2,000 ringgit per tonne. Palm oil and palm-based products had generated 62.7 billion ringgit from January to November 2018 versus 71.4 billion ringgit recorded for the same period in 2017. And that's all from Bizworld this time around. I'm Brandon Wong. Thank you for investing your time with us.